Ladies and gentlemen, welcome back to the 27th Asian EXIM Banks Forum AEBF annual meeting. We trust you've had a nice lunch and we hope you're energized and ready for the rest of today's agenda. Now, as promised before the break, this afternoon we will start things off with the signing of the joint statement on financial support for green development by all heads of delegation. With that, it is our honor to call up on stage for and on behalf of Export Finance Australia, Mr. John Hopkins, Managing Director and Chief Executive Officer. Export-Import Bank of India, Ms. Harsha Bangari, Managing Director. Indonesia Exim Bank, Mr. Agus Windiarto, Managing Director of Finance and Operations. Japan Bank for International Corporation, Mr. Hayashi Nobumitsu, Governor. The Export-Import Bank of Korea, Mr. Hee Seung-yoon, Chairman and President. The Export-Import Bank of Malaysia Berhad, Mr. Arshad Ismail, President and Chief Executive Officer. Philippine Guarantee Corporation, Mr. Alberto Espinosa Pascual, President and CEO. Export-Import Bank of Thailand, Dr. Banjarong Suankiri, Senior Executive Vice President. Export Credit Bank of Turkey, Mr. Hakan Uzun, Deputy General Manager, Treasury, Finance and International Loans, and Vietnam Development Bank, Mr. Nguyen Hoang Trung, Director, Foreign Loan Department. Now that we have all the delegates present and seated on stage, you may now proceed with the signing of the joint statement. Now, if you've completed signing the joint statement, we would kindly request for you to hold up your folder for a short photo opportunity. Okay. Can we have another photo with the folder closed? All right, thank you so much. Now, we would like to request for the delegates to remain seated on stage because we will now be joined virtually by Mr. Chen Bin, the Vice President of the Export-Import Bank of China, who will be joining us for the signing virtually. As you can see on screen behind you, Mr. Chen Bin is also signing the document. And that concludes the signing of the document. But before we let you go, may we have one more group photo with all of you in front of the table with your folders. And that concludes the signing ceremony of the joint statement on financial support to green development by all the heads of delegation. Thank you very much. You may now take your seats. Now that all the delegates are seated, I trust that you are comfortable and ready to continue with today's proceedings. This afternoon, we'll be hearing from Turk EXIM, VDB, Asian Development Bank, Saudi EXIM, and Islamic Development Bank. And to start off, we would like to invite from Turk EXIM, Mr. Hakan Uzun, Deputy General Manager, Treasury, Finance, and International Loans of the Export Credit Bank of Turkey.
Good afternoon. Dear esteemed colleagues, it's wonderful to be in Kuala Lumpur amongst yourself for the 27th Asian EXIM Bank Forum annual meeting. I would like to congratulate Malaysia EXIM Bank for this flawless organization, which is the first Asian EXIM Bank Forum in-person event since the pandemic, and thanks for their sincere hospitality. By the way, actually, according to me, the Malaysia EXIM raised the level of the stick to upward. I mean, John's actually responsibility is gonna be very tough for me, actually, because last night I took a picture or video of the John while he was dancing. It's tough actually for him next year. Actually, we are gonna see. He has 1 year. Okay. For those we haven't met before, my name is Hakan Uzun, and I have been working as the Deputy General Manager of Turk EXIM Bank, responsible for Treasury, Finance, and International Loans since 2019. As you may recall, Turk EXIM Bank has taken over the chairmanship of the forum from Korea EXIM in 2019 annual meeting with great joy. We were very much eager to welcome you in the Turkey for the 2020 annual and technical working group meetings. However, the pandemic prevented us from hosting the said meeting not only in 2020, but also 2021, as we have extended our chairmanship for 1 more year due to circumstances. During the virtual meetings, we have tackled a handful of issues such as the amendment of the AEBF membership protocol and the possibility of establishing a permanent secretariat, as well as discussions and presentation on the effect of the pandemic on export credit sector. I want to thank all member institutions for their support and contribution during the chairmanship term. As we give utmost importance to our relationship with other EXIM banks and export credit agencies, I reckon that Asian EXIM Bank Forum is one of the most important platforms we are a member of. So during the pandemic, Asia was heavily affected by the pandemic, as the continent is the main actor of the global value chain. Trade and investment has decreased significantly in the continent, which has also affected export credit agencies' business. EXIM banks have played a counter-cyclical role during the pandemic, as commercial lenders withdraw and government have placed export credit agencies in the center of their whole-of-government approach. As a result of the interruption in short-term financing from private market due to increasing uncertainties, export credit agencies witnessed an increase in demand for their short-term product. Some ECAs have started new niche, tailor-made products, while others added some flexibilities and updated their existing programs. During this period, Turk EXIM Bank have taken some urgent measures, such as increasing its total loan limits, extending loan maturities, and periods for export commitment fulfillment, as well as extending the due dates for export receivables without any additional premium in insurance programs. Also, Although not launching as a direct result of the pandemic, we have introduced new products during this era in order to assist Turkish exporters enter into new markets, enhance business volumes, and improve cash flows, such as financial institutions buyer's credit insurance, letter of guarantee program, participating finance investment credit. Besides conventional products, we have also focused on Islamic financial products and launched the Participation Finance Investment Credit Program. We had previously signed comprehensive reinsurance agreement with US EXIM, UK EXIM, BP France, and we have continued to sign similar agreements with foreign institutions such as EKF, EKN, MEHIP, and OEKB during the pandemic as well. The pandemic showed us that ECAS needs to act more proactively by filling financial gaps during extraordinary times while offering exporters niche products and acting as a last resort in normal times. What about the green transition? Also, through the signing of the joint statement by Asian EXIM Bank for members, another important trend in global economy, green financing and development, has been embraced by Asian EXIM banks. It is very important that ECAS, as an important financial catalyst for national economies, take into consideration green transition while continue pursuing its support to their export sector. This approach will add positively to the global green transition, as the effect of exporters are always cross-border. Forum's approach in this direction, together with other governmental bodies, will surely aid the sustainable development of Asian continent. While this context, Turkey published its intended national determined contribution to Paris Agreement in October 21, with up to 21% reduction in greenhouse gas emission from the business as usual level by 2030. Turkey has also set a goal to reach net zero emission by 2053. In order to achieve this ambition, the Minister of Trade, which Turk EXIM is affiliated to, published a detailed Green Deal action plan in 2021, in line with the European Green Deal, to power Turkey's transition to a more sustainable, greener economy, in line with the goal of making Europe the first climate-neutral continent by 2050. The action plan has pillars such as green finance, sustainable agriculture, circular economy, combating climate change, sustainable smart mobility, carbon border adjustment, clean, affordable, and secure energy supply. Under the green finance pillar, below headings are addressed: accession to European Union financing facility for Turkey's green transformation, strengthening the green finance ecosystem in Turkey, information and promotion activities for more effective use of existing financing opportunities. Turkey EXIM Bank aligns its sustainability strategy with its government's policy and play an important role in advancing Turkey's commitment to climate change and social developments. The bank has developed a sustainability management system in 2019 to assess the sustainability performance of its operation and integrate environmental, social, and corporate governance consideration into all areas of its business. The sustainability management system is regularly reviewed by the Turk EXIM Bank Sustainability Committee, chaired by the General Manager of Turkey EXIM. Turkey EXIM Bank aims to manage the direct and indirect environmental and social impact that might result from its activities with its comprehensive environmental and social impact policy. This policy is established in compliance with internationally accepted standards and principles. Under the policy, Turk EXIM Bank comply with the environmental and social laws and regulations of the host countries for all credit export, guarantee and insurance activities. We apply environmental and social risk criteria not only to invest transactions, but to all our financing, including working capital loans, while dispersing international borrowed funds. Turkey EXIM Bank doesn't support activities which are prohibited, restricted by the legal regulations, international agreements, which Turkey is a part and included in the Turkey EXIM Bank exclusion list. Turkey EXIM Bank would like to extend its climate change and low carbon transition related support to enable Turkish exporters to be more sustainable, resilient, and stay competitive. By providing support for the export of beneficial goods and services, the bank intends to facilitate the transfer and diffusion of low-carbon technology and infrastructures and consequently contribute to the facilitation of the low-carbon advancement of Turkish companies. We have acquired international renewable energy certificate for providing our bank's energy needs of 1,000 megawatts from renewable resources in 2022. Also, we issue sustainability reports regularly. Turkey EXIM Bank anticipated climate-related risks and acknowledged that climate change can impact business activities. Therefore, the bank intends to systematically consider climate and sustainability criteria in all investment decisions across all financial instruments it offers. In addition to application of comprehensive environmental and social international best practice, the bank aims to take climate-related criteria into account, while considering potential transaction risks that might affect its customers' activities all over the world. Turkey EXIM Bank shows substantial efforts in order to support Turkish exporters through the sustainability team funds with favorable rates. We have established sustainable finance framework under which is intent to issue green, social, and sustainability bonds, sukuk, loan, and other debt instruments, and support its contribution to a more sustainable Turkish economy. Our efforts towards sustainability and green financing resulted in our bank's first-ever sustainability-related syndication loan, amounting to 700 million euro in May 2022. Also, we distributed a portion worth $50 million of the syndicated loan borrowed under the guarantee of Multilateral Investment Guarantee Agency, MIGA, falling under the International Finance Corporation Climate Finance definition in 2021. Turkey EXIM Bank will continue to support Turkish exporters with similar schemes and contribute to their transformation with respect to Green Deal and carbon footprint in future. Here I would like to mention the Turkish trade with Asian EXIM Bank for member countries. In 2021, Turkish economy has grown 11%, while the distribution of the goods and service export has been 44% to growth rate. During the same year, export of the Turkey has increased 32%, reaching $225 billion. Located at the crossroad between Europe and Asia, Turkey gives utmost importance to her relationship with Asian countries. As a result of the growing economic relations, the trade volume between Turkey and Asia-Pacific countries has risen from $15 billion in 2004 to $70 billion at the end of the 2021. The said amount of $17 billion corresponds to 14% of Turkey's total foreign trade volume. Taking into consideration the physical distance between Turkey and the region, this is quite substantial in my opinion. Despite the negative effects of the pandemic and the disruption in the supply chain, Turkey has increased her exports to foreign members countries by 24% in 2021. The increase in last 5 years has been 42%, while increase in the imports has been 17%. Conventionally, China is our country's foremost trade partner among Asian EXIM Bank foreign members, while India and Korea follows. I believe we can increase bilateral trade between Asian EXIM Bank foreign countries through new collaboration mechanisms, including those involving countries, EXIM banks, and export credit agencies. Here, I would like to actually mention the Turkey EXIM and possible cooperation with Asian EXIM Bank foreign members. In 2021, the annual support provided by the Turkey EXIM reached $46 billion, corresponding to 20% of the Turkish export. Of our overall support in 2021, $23 billion was insurance, while the remaining $22 billion was provided as direct loans. Our target for 2022 is to increase the total support by 9%, reaching $50 billion, with slightly more insurance volume in total. Our insurance support to Asian EXIM Bank's foreign member countries for last 12 months has been realized over $500 million. Australia had the most share in this amount, while China, India, and Japan followed respectively. Besides our conventional programs, we give utmost importance to cooperation with other foreign financial institutions, especially EXIM banks and export credit agencies, in order to diversify our support and better fulfill the needs of the exporters. Cooperation amongst export credit agencies have gained more importance in the recent year as the number of the sophisticated mega projects has increased, while the financial package shall be completed by the participant of more than one financial institution. Also, the GVCs and the nature of the large projects makes procurement from multiple countries a must. This means that only one company generally cannot complete a project alone. Thus, it needs to form a strategic alliance with other foreign institutions to meet the requirements of the projects. Export credit agencies play a critical role here by not only providing finance and mitigating risk that make transactions bankable, but also by mobilizing private capital and capacity building. Cooperation among export credit agencies also enable them to share risks and overcome country limit ceilings. Its counter-guarantee reinsurance scheme provides several advantages. Our intention is to continue signing new agreements with eminent export credit agencies. Some benefits of such agreements are simplifying the transaction and speeding up the procedures, reduce transaction costs, enable ECAs to share risks, one set of loan documentation with common financial terms. All these factors contribute to ease of operation and expedite completion of the transaction. Also, motivating export credit agencies to cooperate and complement each other's rather than compete. I believe that by combining their competitive edge, our companies are increasing their ability to penetrate into new markets, which will eventually lead to more export for both sides. I would like to state that we are open to different cooperation mechanisms with Asian EXIM Bank Forum members, such as parallel financing, co-financing, counter-guarantee, reinsurance, credit lines, syndication, and Islamic financing. As an example, under our export-oriented investment loan program, we aim to meet both working capital and export-oriented medium-long-term investment financing needs of Turkey exporters against their export commitments. Under the scheme, we may finance their imports from Asian EXIM Banks Forum countries through credit line allocated by members. Concluding my words, I would like to state that I am sure that this year's annual meeting will be very fruitful and productive, one following the lockdown and the first in-person meeting following a 2 years interruption. I also look forward to meet you all during next year's meeting in Australia. Thank you for your attention.
Thank you, Mr. Hakan Uzun, Deputy General Manager, Treasury, Finance and International Loans from the Export Credit Bank of Turkey. Before we move on, are there any questions or comments for Turk EXIM? If there are no comments or questions from the floor, we'll move on with the next presentation from VDB. With that, we'd like to invite Mr. Nguyen Hoang Trung, Director of the Vietnam Development Bank.
Thank you. Good afternoon, everyone. On behalf of my CEO, I would like to express our sincere apology for his absence due to some urgent meeting with the Minister of Finance in Vietnam. Today I'm on behalf of my CEO. And let us take this chance to express our sincere thanks to Malaysia EXIM Bank for hosting this very successful event. Thanks to this very wonderful moment, we can have a chance to meet each other in person after a long time of pandemics with such a virtually meeting. So taking this chance, I would like to make a very brief update on what we are doing with the green energy in our bank. So let's start with my presentation. I would like to make it very short because I believe that maybe some of us feel so sleepy, so I'm trying to. Sorry. First, I would like to put some information on National Green Growth Strategy for year 2021 until 2030 and vision toward 2050. So you can see that, next slide please. I'm sorry, here. Next slide. We have targets to the 2030 that we will reduce at least 15% compared to the consumption of 2014. And by the end of year 2050, we will reduce at least 30% of energy consumption compared to 2014, and we have ultimate targets to reduce greenhouse gas emission per GDP. And the ultimate goal of our government is to reach 1 to 1.5% per annum reduce of primary energy consumption per average GDP. And we'll try to reach the rate of 15 and 25% of the rate of renewable energy in the total primary energy supply. And we'll try to get 42% of the forest coverage rate by the end of our strategy. This is a very ambitious goal and also very challenging. And beside the national green growth strategy, we also make a very strong commitments of the Vietnamese government at the COP26, which is organized last year. According to the commitment of the Vietnamese government at the COP26, we're striving to achieve net zero carbon emission by the year 2050. This is, as I mentioned earlier, this is a very ambitious and but also very challenging. And our government's commitment to participating in initiative, Global Marathon Pledge, and also commitment to implementing Glasgow leaders' declaration on the forest and land use. In general speaking, our governments are trying to make our best efforts to realize those commitments and also the targets and the goals in our green growth strategy. And one of the key elements for these commitments and the best efforts to realize it is how to mobilize both domestic and also international funding resources to realize those ultimate goals. So it's quite challenging for our government and so for the policy bank like VDB in our daily basis operation in Vietnam. So in response to the commitment of the Vietnamese government and also to the national strategy, we also have our own plan for green energy financing. So let me briefly introduce our operations. As you can see, we are the financial organization of the Vietnamese government, 100% owned by the government and supervised by Minister of Finance. We are operating for non-for-profit. And we are the biggest bank in terms of on-lending ODA in the Vietnamese, the government foreign loans. And we are the first and the only national implementing entity of the Green Climate Fund in Vietnam. And we focus on the development targets of the governments, including Vietnamese growth strategy and Vietnamese climate change strategy. So our main function is we finance medium and long term for investment project. We provide short-term loans in compliance with the decision of Prime Minister. Actually, in the past, we have the function of the EXIM bank. But for the last few years, under the order of the Vietnamese government, we discontinue our trade finance for short-term exports. And we also provide loan guarantee for SME. But also under the instruction of Vietnamese government, we discontinue this service. And now we maintain two pillars, medium and long-term investments, financing, and ODA on-lending. It means the on-lending of Vietnamese government foreign loan. And eligible sectors for VDB financing, as you can see on the screen. We cover infrastructure projects like water supply, waste water treatment, social housing, hospital, education. For agriculture, we focusing on high-tech seafood processing, industrial salt productions, etc., which is with the high percentage of new technology in terms of agricultural factory. And for industry, we focusing on the renewable energy, especially small and medium-sized hydropower, wind power, solar power, geothermal biomass, and we're also focusing on the new and energy efficiency projects. So as you can see, from very beginning of the operation of VDB, we have been focusing on sustainable financing and also the green field of our countries. These are some of typical green energy projects that we are financing. You can see that it's vary from the hydropower projects and to our offshore wind farm, and also we have some energy saving project and also the biomass project. So those are the projects financed by domestic lending. For domestic lending, I mean the medium and long-term financing, we mostly use the government bond because VDB is the government's owned bank. That's why we have a status of the government's rating. And most of our funding sources coming from the government bonds. But as I mentioned earlier, under the new strategy of Vietnamese government and with a very strong and challenging commitment of Vietnamese government in the COP26, we have to mobilize more funds, especially international funding sources, for financing renewable and green field project in Vietnam, which is required, concessional interest rate and also the very long maturity. So this is the very long road to go. So in order to respond to requirements of Vietnamese governments, we have started to access to the Green Climate Fund. We started since the year 2015. As you can see on the screen, we have been through a very, almost 6 years of preparation for getting into the GCF, the Green Climate Funds. I don't want to mention in very details, but you can read on the handouts. There's a very long period for preparation. And finally, last year, we were accredited by GCF. So maybe some of you haven't yet heard about the GCF. So I just give a very brief introduction of GCF. GCF is the Green Climate Funds, which was established in the year 2010 within the framework of UNFCCC to assist developing countries in adaptation and mitigation practice to counter climate change. And they quickly raised more than 10 billion USD in pledge in the year 2015, and with a goal to raise more than 100 billion USD for climate change financing. And so far, there are 114 accredited entities, including national 50%. This is VDB is one of the number of national entities, regional 11% and international 38%. And they have approved 209 projects, including adaptation, mitigation, with a commitment of amount of more than 11 billion USD. And for the sector, you can see on the screen, maybe it's a little bit small, but including healthcare and food security, infrastructure and environments, ecosystem, energy generation, transportation, building, and also forest and land use. And now, with the financing source from the GCF, I can say that this very concessional and very suitable for green financing. As you can see, that they have two mechanisms. They have grants, and they also have concessional loans. So please allow me to skip these very detailed conditions. For the assessing GSEP, as I mentioned earlier, that we have been accredited last July. And we are going to sign the accreditation master agreement with GSEP AMA. And after that, we selected project idea matching with VDB strength, green energy project, and develop funding proposal for submission to GSEP. Last month, we have made our first concept note to GSEP with total value of 50 million USD for financing from GSEP for irrigation system in northern part of Vietnam. So, and I hope that for the next year we can start funding proposal with GSEP for this very fruitful and very good adaptation project in Vietnam. And also we are now implementing the DTA project with GSEP named the Green Banking at VDB. They are supporting us for changing our, analysis procedure and adaptation to green financing standard of the GSEP. This is a very crucial for green operation of the VDB. And by the end of this month, we'll finalize the accreditation condition which is required by GSEP and finalize the signing the AMA with GSEP. And after this signing, we can start applying the new projects to GSEP. For this point, because as I mentioned earlier, VDB is one of the unique entity in the Southeast Asia who have accredited by GSEP. So in this term, we are ready to cooperate with our partner, especially member of AEBF, for supporting those green financing projects in Southeast Asia countries. And I do hope that we can share the project from country to countries, and we cooperate with each other for getting funding from the GSEP for green field project in our countries. So once again, thank you very much for listening. Thank you.
Thank you, Mr. Nguyen Hoang Trung, Director of the Vietnam Development Bank. Are there any questions or comments for VDB? Then next we will move on to the Asian Development Bank. For that, we would like to invite Mr. Christopher Thiem, Deputy Director General, Private Sector Operations Department of Asian Development Bank.
Good afternoon. I would like to again commend the Export-Import Bank of Malaysia and Arshad Ismail for the hospitality that we've all been enjoying. So thank you very much for that. I'd also like to very warmly commend all of the participants of AEBF on the signing of the joint statement for the financing of green development. Clearly, climate issues are front and center in our minds these days. I think we're all recognizing the very essential need for us to use the resources we have at hand to help mobilize solutions to some of the problems faced with the global environment. With that background, I would like to open with some refreshments or also some updates on what's new and exciting about Asian Development Bank. So we have launched a strategy called Strategy 2030, but also earlier this month we approved a organizational review to help us better deliver that strategy. The fundamental components that I think would be of interest to you would be an increased role for private sector operations. So our intent is to use to partner with private sector more closely and to use mobilization as a means of amplifying our impact around the region. The strategy that we have is rather aspirational in terms of the language that's used. It refers to things like promotion of gender equity around the region, promotion of climate mitigation and adaptation, the concepts like making cities more livable. So one of the challenges I had to write the operational plan, the kind of implementation strategy for private sector operations at ADB. And one of the difficulties was translating aspirational or thematic concepts like making cities more livable and translating that and informing a group of transactional people who interact with the external markets. So this slide that you see here was a little bit like a Rosetta Stone, if you will, which kind of took some of the language that was used in our strategy and translated it into more usable language. So things like having more livable cities was converted into support for sustainable transportation, for example, public transportation, the creation of airports, and digitalization of city environments for energy efficiency, for example. So I won't spend a tremendous amount of time on an inward-looking slide informing you about Asian Development Bank, but I think that you'll appreciate that we have a very wide-angle strategy to development across the region. And I think what I'd like to say about that is when it comes to important initiatives or important focus areas like climate change and how to address climate change, I would also encourage you all to think well beyond renewable energy. And many of you have made comments which show significant sophistication in this respect, so I don't mean to make a kind of a novice type approach to the subject, but it's not just about coal-fired power projects. It's a much larger mandate, which includes e-mobility, for example, use of improved technologies in agriculture, the potential conversion of trade flow instruments like trade finance and supply chain finance to help target green growth and to help facilitate green growth. And also, very importantly and often underappreciated is the potential of energy efficiency and conservation as a very important element of the larger equation of how we produce and reduce man-made emissions, which are carbon driven. So with that backdrop, I would also just like to update on the private sector department's products, and particularly with respect to what's kind of new and important as a shared kind of a takeaway from this rather than simply a conveyance of information. So the two things that I think are really worth punctuating would be a big increase in equity operations. So again, the traditional mandate of export credit agencies had traditionally been, either medium or long-term finance or trade finance. But for important agendas like new technologies, I think it's quite critical for our institutions to think beyond some of the traditional products, particularly with respect to the power of equity investments as a way of mobilizing much larger amounts of capital and facilitating experimentation and discovery of new opportunities. So I would, I thought there was a very interesting comment made by Governor Hayashi-san about the evolution of JBIC. And I think that that's something that each of the institutions present today would be wise to reflect on, which is the original kind of naming of export-import banks and the use of buyer credit type configurations certainly has played a very important role, and it continues to be an important piece of the puzzle. But I would encourage, based on dramatic changes in external environments, that you might all consider how your institutions might amend your strategies to take advantage of the opportunities that exist, and for example, partnering with Green Climate Fund, for example. Not only does Green Climate Fund provide concessional financing, but also they're willing to take risks in investments which absorb risks that the commercial markets might not be comfortable absorbing. And here again is a kind of more cutting edge or innovative use of capital alongside things like equity investments. And we're definitely seeing significant and very powerful amounts of blended finance being mobilized around the region, very much transforming the way projects are financed. And it's been a kind of fascinating journey for me at ADB. I would just make share some personal experiences, which I think also kind of relate to what we're looking at here in terms of how we can engage climate finance and climate mitigation successfully. But when I first joined Asian Development Bank 12 years ago, one of the first projects that we looked at was the first utility scale solar project. It was in Thailand. It was called Natural Energy Development. And it was about 70 megawatt project, but the necessary tariff was it was 8 baht. It was about, at the time, about 25 US cents per kilowatt hour, which was terribly inefficient cost of electricity. And we looked at the investment, and we had a lot of different voices in our heads. One voice was saying that it's too expensive, that it reduces the affordability of energy, that it is an inferior technology. But another voice was saying that, maybe remembering how technologies are absorbed and adapted successfully, that really you need to have kind of critical mass, and you need to have demonstration projects in order to kind of break the ice, if you will. And Thailand had a very successful continuing series of solar projects. And now, 10, 12 years later, in different regions, we're financing solar projects of a very similar type of profile at less than 2 cents per kilowatt hour. So it's been more than a 10x change in terms of the economics of those projects. But these things all have a starting point, and having some courage and having some pioneering spirit and having risk-taking capacity are key drivers of what we need to do together to make a difference in the space that's ahead. I would put battery technologies very much side by side with solar technologies. Today, battery technologies are often looked at cross-eyed with doubts about the economics of that technology. But we were having some discussion over lunch about the tremendous power of human ingenuity and invention and the discovery of new technologies. And so batteries lend themselves very much to this type of opportunity where scaling and smart application of technologies, I think, offers tremendous potential for us to make meaningful progress on the generation of cleaner energies. I also just wanted to call out one other project that I thought was particularly fascinating, which was in Vietnam, which was a project that we financed with Electricity Vietnam about 4 years ago, which was a floating solar project on a reservoir near Da Lat in the southern part of Vietnam. And I think this is another area where we have the opportunity to kind of open minds, which is to blend different types of renewable energy together. So any particular technology may be criticized for its intermittency or other characteristics, but hydropower is a kind of battery in that you can store the electricity and dispatch the energy on your command. And pairing that with the intermittency of renewable energies like solar or wind, or both solar and wind, have a lot of potential. It sounds a little maybe childlike, but frankly, it's an opportunity that's in front of us which has tremendous potential in terms of again, unlocking the opportunities and resolving some of the issues that exist with renewable energy. So that project in Vietnam, I think, was also a demonstration project, and we're now seeing opportunities, again, to blend different types of renewable energies to create a more of a base load, more reliability of the energy supply. I'll just mention briefly, I think all of the institutions here have discovered the value of programs in terms of using more structured approaches to particularly reaching SMEs. So ADB's work in this space also involves a significant commitment to trade finance, supply chain finance, but also microcredit. And these opportunities are areas where we hope to be a knowledge partner for all of you. So areas of interest have over the years included things like anti-money laundering compliance, the focusing of trade finance on maybe trade in essential goods, such as medicines, vaccines, and green equipment for energy generation. So I would also just maybe say again, the last kind of inward-looking slide on ADB is that we're getting closer to our clients. I think that might mean that we're getting closer to where you're based. So the private sector operation has been kind of infusing itself across ADB's network, and I see that on our list of where we have a local presence includes many of the good countries that are represented here. For example, India, China, Indonesia, Philippines, Vietnam, Thailand, Australia. So we'll always be, that's another touch point for us, I think, to have, to strengthen our own partnership and cooperation together. On this major agenda that we're discussing about climate-related finance, I'm very happy to let you know that there's been, I think, a very landmark event at the G20 meetings in Bali over the weekend, which involved the Indonesian government sponsoring a kind of energy transition mechanism, which is an arrangement which is designed for to facilitate the early decommissioning of coal-fired projects through a kind of refinancing package. And this is a very, I think, again, a very important stride forward for climate finance-related investments. The impact of it goes beyond the particular project that's being financed. One of the things that struck me as perhaps the most important announcement that was made in the kind of conference at which this ETM mechanism was announced was simply the awareness that coal projects are at the point now where there's significant discussion and tangible progress on the early decommissioning of these projects, which again I think is putting bright lights on this bigger question of should we be building new coal projects at this point. And I think that the knock-on effect of progressing decommissioning discussions is to also witness the pullback of investments in new plants, which may actually end up having a larger benefit from a carbon emissions perspective than the mere financing and decommissioning of specific projects. But I think that this was a very big stride forward, and I'd ask that you familiarize yourself with this agenda, because I think it's one that will be around the Asian markets, and it's one I think that informs our priorities going forward in a way that I think I'd like to share with you. On another related topic, I had a chance to mention how strongly I feel about the importance of equity operations as a way of, again, strengthening the impact of use of our balance sheet. One thing that we've done that I think also could be replicated by some of the institutions here is we set up a donor-backed platform which would focus on doing what we might call angel investments, or very small experimental investments related mostly to climate-related investments, new applications of technologies, but where the risk of success was questionable, in the sense that the one thing that I think we all can recognize about equity investments is the rate of failure is very high. And a lot of our organizations aren't that comfortable with failure. But it's inherent to the equity kind of business that you have a higher tolerance for failure, and that the successes have, kind of pay a multiple back, and that as a flow of business, that proposition is sensible and financially sustainable. But it's hard for all of our institutions to be able to get comfortable with the idea of failure. So what we did with respect to this platform, which targeted very risky small projects, was to provide donor capital to backstop that piece of the balance sheet, so that it had significantly more risk appetite than would have been the case if we were using our own capital. But the takeaways from that, and the potential of creating pilot projects that are replicable and scalable, is very high. And to some extent, as a development institution, and in the face of the changes that we're all confronting and the need for innovative approaches, this was, I think, something that we were pleased, and it has been in operation now for 2 years and is producing very significant effects. And many of those projects are in countries that are represented here at this forum today. Just a couple more comments. One other reflection is, how do we get out of the problem of having an impaired climate? And technology is something, of course, that, again, we need to recognize as being one of the most important work phases. But at the same time, on the technology side, again, I'm an optimist. I mentioned, my faith in battery technologies and other technologies, potentially hydrogen and other things that have been mentioned. At the same time, we should not be complacent and simply say that technologies will find our way out of this. So it really takes a combination of experimentation, as I'd mentioned about the solar project in Thailand, potentially going against conventional wisdom to do new things, to discover new things. But I also fundamentally feel as if technology is, I think, going to be one of the most important drivers of success in this space that we're focused on. Last comment also on the ADB side, as an institution, we've rebranded ourselves as the Climate Bank for Asia and the Pacific, and we've committed to do $100 billion of our own capital in climate-related finance before 2030. So we hope to be a close partner with all of you when it comes to discovering the opportunities in this space and unlocking the potential and cooperating very closely to mobilize capital jointly with you all. I had a chance to mention some of my kind of admiration for the trade finance business. I'll be brief, but trade finance, in the context of some of the economic pressures that we're experiencing across Asia, has found a kind of a special place in that some countries have experienced high indebtedness and strains on their ability to service external debt. And in that context, the continuity and the promotion of trade finance lines, which in some respects are similar to working capital for countries, if you will, is a key area. So we've been very deliberately taking a kind of counter-cyclical approach to facilitating and maintaining or enhancing where possible our commitment to support trade finance in places like Sri Lanka, which has had a very bad year, and also Pakistan, which is also struggling with the impacts of floods and some other instabilities. So I would also, maybe if you haven't already, reflect on the importance of your own involvement in trade finance as a way of stabilizing the economies of the region. It's underappreciated and very, very critical. One thing we've also been able to do is to blend some of our sovereign operations with trade finance, so that if the issue of access to foreign exchange is the kind of make or break issue from a credit perspective, we've been able to work with governments to essentially provide foreign exchange backstop facilities to promote kind of rotating lines for trade finance, to keep trade finance lines available, particularly in the context of situations as arose this year in Sri Lanka, where the importation of fuels, food, and other essential goods like medicines and vaccines was impeded by the lack of trade finance facilities. So in that context, I think, again, some innovations in terms of blending kind of the resources of different parts of our institution has, I think, helped facilitate the health of the trade finance activity in strange situations, so as not to precipitate and exaggerate economic or the macroeconomic impacts that are being experienced around the region this year. The next slide, perhaps. Yeah, I think a number of people have touched on sustainability-linked bonds and green bonds and blue bonds for ocean health and other sustainability-linked agenda items. So this is a very fast-growing area. There have been a lot of positive media coverage. I'm often asked, how many, borrowers will ask, how many basis points will I save if I have a green certification? And the way I usually reply, just to share my notes with you all, is that the media coverage of the issuance of green bonds is extremely positive and reflects very, very well on the companies that show this capacity to engage this space and to kind of partner with important institutions that reflect well on those corporates. So, and that in turn can actually promote the perception of value in the public markets for listed companies, for example. So I had a very positive experience working on a Thai baht denominated green bond for a company called Energy Absolute, which listed a green certified bond in the stock exchange of Thailand. But the media coverage was extraordinary. And I think that media coverage led to some differentiation where, again, the company that we worked with on that bond issuance was seen as being ahead of its peers and doing things creatively and more innovatively. So that, I think, is one of the benefits of the green bond kind of program, is the benefits of being a first mover in that space. So hopefully that's something that you might reflect on. And I know that many of you are interested in issuing green bonds on your own balance sheet, and in particular, I'd commend Thai EXIM Bank for successfully issuing a green bond in the Thai markets just a couple of months back. So that was a major success story, but others may find that there's opportunity there as well. Mobilization is something that, again, I think we've had a chance to talk about. So I think I'll be a bit withdrawn in terms of extensive commentary on it. But the markets are changing quite a bit, and so we're seeing a lot of development finance institutions come into the space where export credit agencies had traditionally been the kind of major players. So entities like FMO, Proparco, other bilaterals that had not been traditional players in the kind of space that we're all working in, have led to, I think, a significant transformation. And again, it prompts, it should be a prompt for all of us to consider how strategies might need to be adopted to potentially absorb new mandates and make sure that the publics that we serve are well served by our institutions and our strategies. I am concerned about using too much time, so I'll be very brief with my remaining comments. Yeah, I think I should close. So, yeah, I think I've had the opportunity, I think, to touch on most of the things that I wanted to touch on. I think one of the last things was just, I appreciated the comments made by EFA about the co-financing that we accomplished in Vietnam for a company called VinFast, which is a new platform for the assembly and distribution of electric buses, cars, and motorbikes in Vietnam, which I think will be very transformational there. The company is well situated to provide charging stations. It's a kind of real estate-oriented company, and we're delighted to have that opportunity to work with the company with success ahead, I think, when it comes to their very pioneering investment in the space. But as I had commented on earlier, and this will be my last comment, I just think that we all need to be mindful that the climate finance space is not just renewable energy. It's also an expansive agenda for reducing the carbon emissions created by human activity, which can include agriculture, transportation, as well as conventional energy generation and consumption. So those are the comments I have. I'd also just like to close in saying that ADB is, I guess, a permanent observer of the AEBF. We're very pleased to have had, I think, a helpful role over the years. And our role is to strengthen major partners such as yourselves. And we remain very, very committed to that. We're a very open book about what we do. If there's anything we can do explaining how our policies on safeguards, our ESG are created, or give you advice on ways that you might modify your own operations, we'd be very, very delighted to partner with you on those activities. So thank you very much, and again, commend you all for the joint statement that was signed earlier this afternoon. So thank you so much.
Thank you, Mr. Christopher Thiem, Deputy Director General, Private Sector Operations Department of Asian Development Bank. Before we move on, are there any questions or comments for ADB? If there are none, next we will hear from Saudi EXIM. For that, we would like to invite His Excellency Saad Abdulaziz Al Khalab, Chief Executive Officer of Saudi EXIM Bank.
This one. This is Firas Nasrallah, Director General of Business Enablement and Studies at Saudi EXIM. I'm here representing His Excellency Engineer Saad Al Khalab, the CEO of Saudi EXIM, who had to leave Kuala Lumpur last night to attend an urgent business function in Riyadh today. He sends his sincere apologies and warm regards to your distinguished assembly. Mr. Arshad Ismail, President and Chief Executive Officer at the Malaysian EXIM Bank, distinguished heads of state, heads of delegation, and participants and observers. It's a pleasure to be here today, addressing your esteemed assembly. We thank you for inviting Saudi EXIM as an observer of this year's AEBF. It's an excellent opportunity for us. We very much appreciate and cherish your kind invitation and the generous hospitality of our Malaysian hosts. It's always a delight to be visiting Kuala Lumpur. This is such a beautiful city that we always like to visit. I'm joined in the attendance of this informative session by my colleague, Mr. Naif Al-Ajroush, who is the Head of International Relations at Saudi EXIM. I will only take a very few brief minutes to give you a background about Saudi EXIM and what we have done so far. With 100% government ownership stake, Saudi EXIM was launched back in early 2020 with a main mandate to support the growth of non-oil exports in line with the objectives of Vision 2030, which seeks to diversify the economic base of the Kingdom of Saudi Arabia away from oil dependence, where we aim to increase the contribution of non-oil exports to non-oil GDP from the baseline of 16% back in 2016 to a minimum of 50% by 2030. We have a committed capital of 30 billion Saudi riyals, which is equivalent to 8 billion US dollars. We provide various credit solutions covering financing and insurance. We are regulated by the National Development Fund, which is the regulatory body of all government-owned development financial institutions in the Kingdom of Saudi Arabia, including Saudi EXIM and 12 other DFIs, such as the Saudi Industrial Development Fund, the Saudi Fund for Development, the Saudi Agricultural Development Fund, and the Social Development Bank, amongst a few others. The National Development Fund is chaired by His Royal Highness the Crown Prince. And we understand that for us to provide a meaningful packaged offering to our clients, we must engage with our sister government organizations, as well as our regional and international counterparts. Our vision is to empower the Saudi and oil economy in global markets, and our mission is to enable Saudi exporters to win global markets by means of bridging financing gaps and mitigating export-related risks. And that is why we are keen to complement the offerings of commercial lenders, not to compete with them, where we intend to maximize their contribution in supporting export financing, not to erode it. Our strategic objectives are, one, to maximize the economic impact of our activities, where we would not only be looking at the normal credit metrics that any FI would be looking at and analyzing, but we also go further and we analyze the anticipated economic impact associated with our credit activities to ensure that they add value to the national economy. Another strategic objective is to increase the intensity of the available credit to Saudi-based exporters, be it through Saudi EXIM directly or preferably through commercial lenders, through the comfort tools that we provide them with, be it a guarantee or an insurance cover. Another objective is to ensure that we do not only address the needs of our clients, but to ensure that they have an outstanding customer experience with us. And that's why we have established a customer experience function that sits aside from the business segment to ensure that we properly hear and address the feedback of our clients. We also intend to raise the awareness and the financial literacy of Saudi exporters. Finally, we know for certain that we cannot successfully achieve all of the objectives I just listed unless we engage in fruitful engagements and partnerships with our counterparts in the region and around the globe. We at Saudi EXIM play two main roles. Firstly, we aim to encourage and enable commercial lenders to expand their export credit capacities. Secondly, we aim to provide credit solutions to our exporters, catering to their specific needs across the different stages of the export activity. And if we play these two roles correctly and effectively, the availability of the required liquidity to carry out export operations would be there, and we would provide effective mitigations against export-related risks, and ultimately, we will better position Saudi non-oil exports in the global markets. We serve three main segments of clients: Saudi-based exporters, where we also support foreign investments in Saudi Arabia that have export activities. And also we provide credit support to foreign importers of Saudi non-oil products and services. And we provide specialized offerings to financial institutions. We have three main product groups. We provide financing, be it direct or indirect, and we also provide export credit insurance. I don't want to go through the list of each product because these products were based on the surveyed needs of our exporters, and they were also based on a benchmarking exercise that included entities that are present with us here today. Ever since we have started our operations, we have successfully obtained a membership in Bern Union and Amman Union as well, and in GNEXID, which is a Geneva-based network of export-import banks and development financial institutions. And we look forward to very soon joining this esteemed forum, and hopefully one day we look forward to hosting it in Riyadh, in Saudi Arabia. Thank you so much for giving me this opportunity, and it's a true pleasure that we got the opportunity to hold bilateral meetings with many of the participants here today. We appreciate this opportunity. Thank you.
Thank you very much for that presentation from Saudi EXIM. We will open the session for any questions or comments for Saudi EXIM. If not, next we will move on for the presentation by Islamic Development Bank. And for that, we'd like to invite Mr. Iftikhar Alam, Regional Manager, South and East Asia, International Islamic Trade Finance Corporation, ITFC Regional Hub, Jakarta, Islamic Development Bank.
Thank you. Thank you for the introduction. And it's been a long day, and hence I try to make it quick and simple so that we can all get back in good shape today. So this is the first time we are participating this annual EXIM Bank Forum. So in the interest of the participants, I would like to explain who we are and what we do. So who we are. So back in 1975, the 57 OIC member countries formed Islamic Development Bank, which is the parent company of ITFC. But since the beginning, the bank realized the importance of trade finance. I think I can bravely say IDB is one of the organizations who had the trade finance program from the very beginning of its establishment. So since 1977, IDB established a department called Trade Finance Facilitation Program, and through which they are supporting the member countries. But in 2008, they realized that the importance of trade finance, and then they have separated a separate entity within the IDB group to support the member countries better. So our vision is to be the leading trade finance solution provider to the OIC member countries and work as a catalyst for the development of the member countries. Till 2011, till today, we have extended around 60 very busy slides, so you don't need to really pay so much of attention. Let me try to simplify it. So around $61 billion of trade finance we have extended to our member countries, mostly financed, partly unfunded as well. The main beneficiary of our facilities are the Asian countries, which contributes around 67% of our total financing, followed by Africa, and partly goes to South America as well. So given the recent pandemic and ongoing supply chain challenge, and in the food commodity sector, we have started extending more facilities to the health and agri sectors to support the member countries to address this challenging time. So this is the kind of approval we have given to our member countries so far, and it is worth mentioning that around 38% of our facilities have been extended to the least developed member countries, and that is where we feel that more requirement will be coming, and hence we feel that the financing will be going more to this sector of these member countries among these 57. It is important to highlight that we don't only finance from our own balance sheet. We go to the market, we syndicate the operation. So there are around 70 plus financial institutions who work with us, and they are quite comfortable with the facilities that we have extended to the member countries. It is worth mentioning that 70% of our portfolio is to the government, and around 20% to the FIs, and around 10% to the corporate directly. So unlike many MDBs, we have a 3 segment of the client base where we extend financing. So following our commitment, we also actively follow the 7 development goals of the out of the 17 SDGs, and these are some of the statistics where you will find the development impact in the member countries. Especially it is more impactful in the less developed countries where the oil and gas, which of course it may not be sound very interesting here, is still required to run their economy, and that is where we are still supporting these countries very actively. In terms of our product proposition, this might be of interest to you because we are the only Islamic trade finance institutions in this forum. We have very simplified 3 products here. One is, we call it Murabaha trade financing, which we can offer to the banks and also to the corporate directly. So many people usually complain that Islamic financing is a lot of documentation and this and that, but with the help of our legal Sharia board, we have actually simplified it, and the corporate or the borrowers and the banks are finding it really easy to deal with us. And that's why you will see our private sector portfolio is growing significantly over the time. As we speak now, we have got around 45 banks in our portfolio and around 10 corporate that we support their trade finance requirement. This is the product that we have launched very recently. Our ADB colleagues might have aware of this LC confirmation guarantee program, but it's slightly different than what most of the development banks offer, where they usually give them the kind of guarantee to the bank and the bank facilitate transaction. Where we have gone an extra mile, we can give a guarantee to the banks to do the transaction. At the same time, we can also deal directly with the corporate. So we have both the options open, whatever is convenient for our client. So it is not only that we do provide financing to our member countries and the financial institutions. We also offer various types of development program to improve their capacity. It starts from the online or class-based trade finance program, also to different type of training. 2 particular program I would like to highlight here. We run a program called Coffee Development Program in Indonesia, where we train around 500 master trainer, then who goes and train the farmers how to increase their yield of the production. And we see a significant development of the areas who actually got trained by us. And it is running very successfully. A big thanks to Indonesian government, especially to Aceh governor, who is very helpful to us. They give us a couple of plot, what is this called, a demo plot, where we are running this program. We would like to extend it across Indonesia. We also have a similar program to some extent in African countries and also in Bangladesh in different forums. If any of your member countries or the SMEs that you support through your EXIM banks would like to work and extend their export market to any of the YC member countries, we are open for your participation. We do run different type of programs. A couple of programs examples are there, and you can contact us and we'll try to accommodate. So now let me just briefly touch base our insurance wing, which is called the Islamic Corporation for the Insurance of Investment and Export Credit, in short ISEC, which is we call the MEGA version of IDB. It was established in 1994, and currently there are 49 active members out of 57, which means the Articles of Agreement has been passed by the Parliament of these 49 countries. So the ISEC, in brief, support the cross-border trade and foreign direct investment in its member states through Sharia-compliant risk mitigation tool. ISEC is the multilateral export credit investment corporation worldwide, the only one that provides Sharia-compliant insurance and reinsurance offerings. So Moody has rated them as a 003 and for the last 14 years. So ISEC service mandated by the providing risk mitigation and risk enhancement solution to the member countries who subscribe the capital, and they support the buyers and sellers worldwide investing in the member countries. ISEC supports international exports selling to the member states if the transactions are for capital goods or strategic commodities. ISEC has specific policies to address various needs of Islamic banks, such as bank master policy that is designed to support both the conventional banks and also the Islamic banks. And they also have a product called a documentary credit insurance program by which they support the export of the goods to the member countries. So in Asia Pacific region, ISEC operates in Jakarta. I mean, we share the same office, covering the member countries which are Brunei, Indonesia, and Malaysia, and the Dhaka office covers Bangladesh and Maldives. ISEC Asia region operates also insurance demand for the non-member countries' financial institutions, ECS, especially from Singapore, Hong Kong, India, China, that have transactions involving ISEC member countries. Since its inception, ISEC has insured around $83.3 billion worth of investment and trade, and from the total business insured of $17.2 billion for investment and $66 billion worth of trade transactions. So almost 50% of the ISEC transactions involved in the Asia Pacific region, which I believe is of interest of this forum today. So as we as the Islamic Development Bank Group look forward to work closely with the Asian or AEB forum in the coming days. I'm sure there's a lot of interesting project or program that we can co-finance, or also we can participate both in the form of capacity building. And before I end, I would like to give a big thanks to Arshad and his team for the extraordinary hospitality and the support that you have extended to IDB and my colleague and the IDB team. Thank you very much, and it's a pleasure to meet all of you in this forum today. Thank you.
Thank you very much, Mr. Iftikhar Alam, Regional Manager, South and East Asia, International Islamic Trade Finance Corporation, Regional Hub, Jakarta, Islamic Development Bank. Are there any questions for the Islamic Development Bank? Well, if there are none, ladies and gentlemen, that concludes the series of presentations for today. We'll now have a short break for refreshments, and after that, we'll continue with the Training Committee report at 4:20 p.m. Thank you and enjoy your break. Ladies and gentlemen, welcome back. We hope you've had some good refreshments outside. Thank you for staying with us. Now we'd like to move on to the next agenda of the day, the report on training programs 2021-2022 by the China EXIM, and the presentation on training programs for 2022-2023 by EFA. With that, we would like to begin by inviting Ms. Zhang Jingyi of the Export-Import Bank of China as the chairman of the Training Committee of 2022, who will be joining us virtually to deliver the report on training programs for 2021-2022.
Good afternoon, everyone. Mandated by Mr. Chen Bin, our Vice President, I'm here to report to the broader group on the 2021 and 2022 training programs, as we are the chairman of that term. Next slide. Well, according to the arrangement of the AEBF Training Committee and the consensus of the late TWG, China EXIM Bank assumed the chairmanship of the 17th Training Committee, responsible for the training programs of 2021 to 2022. And after assumption of the chairmanship, we started immediately the consultation of training topics. With active participation of all the AEBF members, we settled on two topics, LIBOR transition and green finance. And as the training topics for the year's training. And ADB and China EXIM Bank organized two training programs respectively during the training year, with green finance by China EXIM and LIBOR transition by ADB. Unfortunately, the COVID-19 pandemic impacted heavily on the international travel. Therefore, the AEBF members were still unable to meet face-to-face in this sense. And the training programs of 2021 to 2022 remain virtual. Okay. As to the progress of the training programs, we organized the Green Finance training program on November 12th last year. And it is a combination of lectures and experience exchange, providing knowledge input from the government, multilateral financial institutions, and academic aspects. Altogether, 49 participants from member institutions were online to take part in the training program. Here, I would like to extend our special thanks to Thai EXIM for their timely reminder and the training material sharing of the previous Green Finance training program hosted by Thai EXIM. And in the chart, you can see that in the lecture section, we've got Malaysia EXIM Bank, Thai EXIM Bank, Indonesia EXIM Bank, Indian EXIM Bank, EXIM, JBIC, Turk EXIM, VDB, EFA, and China EXIM staff participate in the session. And as to experience exchange, we've got altogether 6 member institutions took part in the session. Next slide, please. Yes, and then as to LIBOR transition training program, it was organized this year on 24th March, and it was organized by ADB. As LIBOR transition is still an ongoing process with no conclusion, the training program took form of a workshop instead of a pure lecture. And the ADB LIBOR Transition Working Group presented the ADB experience with LIBOR transition. And altogether, 64 participants from 7 member institutions joined the workshop. JBIC, EXIM India, China EXIM, ADB took part in the discussion session of the topic. And here, instructed by our Vice President, Mr. Chen Bin, as he's responsible for our treasury businesses, we would like to take up some of your time and share with you some additional input. The Panda bond market is one of the main channels for foreign sovereignties and multilateral financial institutions to raise funds denominated in RMB in China's domestic market. As the Panda bond market develops steadily in recent years, the interbank market has seen the issuance of Panda bonds by several foreign sovereignties and multilateral financial institutions, such as the New Development Bank. Since the beginning of 2022, the interest margin between USD and RMB has widened. With the interest rates of RMB bonds at a relatively low level and exchange rate of RMB comparatively stable, we think it a good time window for Panda bond issuance. China EXIM is an active supporter to Panda bond issuance. The bank has underwritten the New Development Bank's RMB bond this year and is pushing forward Hungarian government's plan to issue green bond denominated in Chinese yuan. And we are very keen in deepening our cooperation with you in the above-mentioned aspects and other areas where we can join hands. And thank you very much. That's the end of my presentation.
Yeah, perhaps we can move on to the next item. Thank you very much to the EXIM Bank of China.
Thank you, Ms. Zhang, for that presentation. Next up, we would like to call upon Mr. Nick Frankham, Head of Department, Corporate Affairs, Export Finance Australia, as the Chair of the incoming Training Committee, to deliver the presentation on training programs for 2022-2023.
Thank you. Good afternoon, everyone. My name is Nick Frankham. I'm the Head of Corporate Affairs at Export Finance Australia. I'd like to thank China EXIM Bank for their presentation on the training program for last financial year and for chairing the committee. Before talking about the training topics which were selected by members this year, I'd like to first cover the topics that members suggested. This year we received a total of 19 suggested topics. That shows a great interest. These topics fit neatly within the following themes: supply chains, products, ESG, innovation, green and transition finance, and risk analysis. In the lead up to and at the technical working group meeting in June, members voted on their preferred topics. And the topic with the most votes was sustainability and integrating ESG goals inside ECAs. This has certainly been reinforced to me during our bilateral meetings and in the presentations today. The topic with the second highest number of votes was regional supply chains and the role of ECAs. During the technical working group meeting, India EXIM Bank offered to host a third training session on its trade assistance program, which Ms. Bangari covered today, so thank you, India EXIM. So as a result, we would like to propose to members the following schedule. In February, India EXIM has proposed to host its training on its TAP program in person. In April, the ADB will host a training session on regional supply chains and the role of ECAs. It is still yet to be determined whether this would be virtual or in person. And in June, we will host, at this stage, a virtual training session on integrating ESG goals in ECAs. I would now like to talk briefly about each of those sessions. As I mentioned, India has offered to host its session on the Trade Assistance Program. The program provides support by way of various trade instruments to various banks in India engaged in international trade. To briefly recap, it does this by offering transaction-specific, partial or full guarantees to cover payment risks on banks in least developed and developing countries. TAP will be looking at 54 economies across Asia, Africa and Latin America. By providing an India EXIM Bank guarantee, Indian banks can have confidence to extend export finance to relatively unfamiliar banks abroad. This program is designed to boost India exports while also helping foreign importers to engage in international trade. This helps to support diversification and boost exports to new markets. There will be further information provided in due course. The second topic relates to regional supply chains and the role of ECAs. As we emerge from the pandemic, it has become clear that secure and reliable supply chains are vital for economic growth across the region. Training on this topic will look at the role of ECAs in financing regional supply chains. The ADB has offered to support the delivery of this training as it has a range of existing training programs on this subject. We are currently working with ADB to develop the program. This may be delivered in person or virtually, but no decision has yet been made. We would welcome ideas or comments from AEBF members on the particular focus of this training module. And then third, the training program, third module for the training program for 22-23 will be hosted by Export Finance Australia. This topic will cover sustainability and integrating ESG goals into ECA practice. There are many existing and emerging standards that are followed by ECAs around the world, and this training will help to investigate some of the practical ways in which we can assess and support transactions and how we can use our capabilities to support improvements in the ESG practices of the businesses that we support. It is our hope to ensure that all members can benefit regardless of where their ESG program currently stands. Please look out for a further communication about the training for 2023 very soon. And finally, we are still working through our considerations at Export Finance Australia regarding the arrangements for the technical working group, whether it will be virtual, in person or hybrid. And I know that there is a strong interest in that, so we will be able to update members regarding, pardon me, the TWG at the same time. That's all from me, thank you.
Thank you, Mr. Frankham, for that presentation. Ladies and gentlemen, now that we've successfully completed all the presentations lined up for today, now we would like to present a small souvenir as a symbol of our appreciation to all delegates. For this, we would first like to invite to please join us on stage Mr. Arshad Ismail to present the souvenirs. First up, we would like to invite from Export Finance Australia, Mr. John Hopkins. Next up, for or on behalf of Export-Import Bank of India, Ms. Harsha Bangari. Next, from Indonesia EXIM Bank, Mr. Agus Windiarto. Next, from Japan Bank for International Corporation, Mr. Hayashi Nobumitsu. From the Export-Import Bank of Korea, Mr. Hee Sung-yun. From Phil Guarantee, Mr. Alberto Espinosa Pascual. Next, we would like to call upon Dr. Benjarong Suwankiri from the Export-Import Bank of Thailand. We would like to invite Mr. Hakan Uzun from the Export Credit Bank of Turkey. Next, we call upon Mr. Nguyen Hoang Trong from the Vietnam Development Bank. Next, representing Saudi EXIM, we would like to invite Firas M. Nasrallah. Now we call upon Mr. Christopher Thiem from the Asian Development Bank. And last but not least, from the Islamic Development Bank, Mr. Iftikhar Alam. Thank you, Mr. Arshad Ismail, for delivering those souvenirs. We now invite you to take your seat to signify the official handover of the chairmanship. And now we would like to signify the handover of the AEBF chairmanship of 2023 to Export Finance Australia from Inche Arshad Ismail to Mr. John Hopkins, Managing Director and Chief Executive Officer of Export Finance Australia.
So I've said many times, it has been an absolute privilege welcoming you to Kuala Lumpur and hosting all of you. I hope every one of you found this event as enriching as I found it. I've learned so much. I know that we have so much to do. And now I have the absolute pleasure of handing over chairmanship of AEBF to my friend, John Hopkins. Over to you.
Thank you so much. Look, it's a great honour to be taking on the role of chair. I was talking to India EXIM earlier about the history of the forum, and through my own experience appreciate now how this forum empowers our collective operations. And while I wouldn't be so bold as to say we can offer you a better experience in Sydney because you've just done an absolutely outstanding job, I look forward to welcoming you in 2023 to our beautiful city of Sydney for a very Australian AEBF experience. So thank you very much.
And ladies and gentlemen, as you can see on screen, this signifies the official handover of the AEBF chairmanship of 2023 to Export Finance Australia. And ladies and gentlemen, with that, we have come to the end of today's agenda. We thank you once again for your attendance and participation and hope to see you at the farewell dinner later tonight. Thank you and have a great day.